SJ Fibonacci here, and welcome to week 2, or week 2's roundup rather, in our series, or in my series dubbed Small Account, Big Habits. For those who aren't aware or just catching up, or this is your first video, I have created this YouTube page to document my process, or document my journey to becoming a profitable Forex trader. Right? This is my latest pivot in that journey, where I decided to trade a small account, which decided to trade a small account, which is a micro account that currently sits at, I think it currently sits at $400. Let me just check. It currently sits at $400. I would have added some funds to it over time. It's $480.18. A micro account, which allows me to trade micro lots. And how the broker treats the micro accounts is that on the trading platform, it will look like it's a $41,000 account versus it being a $400 account. All right, so it's just a numbers thing why it looks that way. So when you guys see me report on gains, it will look like it's in the thousands or it's in the hundreds, but eventually it's tens and ones. All right. So before I get started, let me just go to the dashboard, and I will show you guys where the net P&L currently sits. So, which is not the focus anyways, but this is where net P&L currently sits. I'm going to show you where we ended last week. So let's filter on last week. So in last week, this is actually $11.39. So we ended last week, we came $11.39, so around 3%. Is around 3% of the account that started with $300. So that means like 3% in 1 week. And just backtrack a little bit. The whole idea of it is that trading a small account to focus on creating good trading habits, right? So, because there are other things that I do that are destructive to another trader. I'm trying to get out of. I mean, I'll get into how this week went. Didn't go well in terms of executing and, trying to eradicate some of those bad habits. It didn't go so well, but we're still up, right? So this is where we have ended last week, and this is where it ended this week. And funny enough, so this is $28, which is almost 10%. And it's almost 10%. And how I'll be thinking about is that if I can make 10% in 2 weeks on a $300 account, then if I was to replicate that on a $30,000 account, that would have been like $2,800 in profits in 2 weeks, which is approximately like almost $400,000 in Jamaica. It's probably $400,000 in Jamaican currency. That's a lot of money to make it 2 weeks. And let's just say I did it on a $20,000 account. Sorry, 20,000, like a $200,000, which is where I'm trying to get to. A $200,000 account, right? You make almost 10%. 10% on that is like, that's a 20,000 in 2 weeks. That's kind of crazy. Think about it. And that would work out to be about, is that $3 million? That's around $3 million, right? Yeah, they're about in 2 weeks. Crazy, right? But yeah. So what I actually want to do though, I'm not going to come out of, I'm not going to stop, I'm not going to transition back into a prop firm challenge until I've grown this account to about $1,000. And then I'm then going to use that $1,000 to pay for a $200 account. But the idea is that the time it can take me to grow this account, which is currently $400, to around $1,000, the time it can take me, during that time, I should have already been refined, right? Get rid of the bad habits, got into a groove and stuff. So that's the whole idea. That by the time I get to that $200 account, I would have been refined and ready for the prop firm challenges. Because what I found was that I was not ready for prop firm challenges. It really was not. All right. So this week was bad because I actually was up until Thursday. So I would have made, I think I made $2,000 on Thursday. So at some point during Thursday, I would have been up $2,000, and I completely draw down the account during the night. So this actually uses the calendar day and not the trading day. Because for me, the trading day on Thursday would have ended from Thursday around 6, right? But that's not the case for this. It's using the calendar date. So yeah, I was up like $2,000 on a day. The account was sitting at around 40. I mean, the gains, P&L was sitting at around 48. Let me show you because it will tell me. I think the inside tells me, right? I was up like $2,000 on a day, and I ended up closing around $500 completely. If you look at this, massive losses on UJ and massive loss on GJ, which is what I'm going to go, which is what I'm actually going to go into first. So I did a lot of over trading, over risking, right? I would have agreed, I would have set risk parameters at the start of the whole exercise, 1% per trade. But then I was doing, I don't even think I was at some point I wasn't even calculating how much I'm risking. I was just going in, right? Which is bad. So that's the main thing I did this week. That's really bad. Whereas I just kept going on into these big trades. If you ever look at this, the reason why I ended up making this on one trade is because I'd gone in with very high risk. All right. So I actually started this one first. So that's how I ended up having $2,000 on the day to begin with. I lost on there earlier in the night or early in the morning, around 2 a.m. in the morning. And so I revenge trade later that morning when I was on my way to work or when I just got to work, and I end up getting this. Now, I'm not proud of a gain like this because I would have broken my rules to get it. And I could have easily gone another direction. In fact, let me show you how badly it could have went, right? Because when I was going back through it, I realized that if I had not exited the trade the time I did, I would have ended up in a loss. So I mean, I didn't pick the wrong direction, but then the market. So this is where I initially entered. I got stopped out when I entered here. Got stopped out when I entered late earlier in the night. Got stopped out. And this was the trend following trade. The market broke down, created a new low. I was expecting to push back up, create a new lower high for it to continue falling. It did that, but then I don't know, I was just entering at the wrong time. So this is me entering the wrong time. So I got stopped out. Um Now later in London, I re-entered. Right. So this is later in London where I re-entered. I didn't even enter, yeah, I re-entered. And then I entered another position. So you're seeing two of these this is like two sort of positions. So this is the main position. Then there was this other position. I think, and this one was like really heavy because I was revenge trading. I was trying to make back money I lost. All right. Now when I got to work, oh, I think I exited here when I got to work. So it's around, I'm not sure what time this is, but I exited the trade when it started to break down on this. Again, when I do these, so when I do this, like, so I always say I create like psychologically unsafe environments myself. Because a big part of being a good trader is to be psychologically sound, which means that you're not worried about losing any big money. There's not any greed or any negative emotions. So a big part of it is psychological safety. I created a psychological unsafe situation because of what I did prior, right? So as soon as I saw the market doing this, I was like, all right, let's get out of this. And I eventually exited. Now, what happened when I exited is that I guess it was a good thing I exited, I guess, because the second position I entered, the market actually pushed up and stopped out that second position, which I think was a massive position in terms of the size. So I would have lost on that. So I avoided that loss, right? But then my main position, which I entered earlier, was still the same. And the market eventually pushed on like this. No, I didn't catch any of this because I was already out of the trade. So like stuff like this kind of really upset me. Because because I was not wrong in the decision I did in the I wasn't wrong. So let's think. I was wrong in terms of where I thought the market was going to go, but then in terms of how I executed, that is a problem, and that's what I'm trying to fix. So I am technically sound, I'd say, most of the times I'm technically sound, but then when it comes to the actual execution and management of the trade, that's where I'm falling short, and that's what I need to focus on. All right, so that was one of them where I was completely over leveraging and just doing a lot of crazy stuff. No, I was also doing that same thing on wait, which one of days was it? Was it this day? Was it 12? Right, it was the 12th. So this will be the entry that lost out for. Again, both of these entries were entries where I was over risking. So after did some crazy stuff. So at one point I ended up decided that I was going to. So when I initially got stopped into that other trade, when the market pushed up and stopped me out, this is where I started to panic now and I started to be a foolishness, right? So now I thought that the market is gonna go up. Now it ended up being a counter trend trade in the sense that the market was already creating these lower lows, these lower highs, and the market that got to the level. Remember me, well, if you're following the course, these blue lines are my daily levels. The market got to the daily level. Now I'm thinking the market is going to push up. Don't know. Again, that was just me panicking, and those are things you also want to avoid. You don't want to be all over the place. Right. So it just didn't make any sense. And I got stopped out, which is the entire move that we'd have seen on the other trade. Right. So I got stopped out on that trade. All because I ended up panicking, not paying attention to what was happening. And yeah. And then this isn't even my setup. I don't even know how did I mark this. Right, this is not my setup. I don't trade that way. That's not one of my setup or strategies. So I shouldn't have been entering that. All right. So those are the things that have been happening. Let me see if there is any other on the day. Yeah, that day was particularly bad. So a lot of things I need to fix happened on that day. Happened on this day, the 12th. Right. So also I was doing some lot of crazy stuff on GJ. What was actually most upsetting though, I think was this trade. This is the one that was most upsetting. I am so disappointed in myself. So I would have closed out. All right, let me tell the full story. I'd have been buying from all the way down here. All right, so on Monday, let me go to that first. On Monday, so stick a ping there. On Monday, or was it? Well, I would have entered it on Monday, and I think I closed it out on. I closed it out on I entered it on Sunday when I closed it on Monday. So I would have already been in. I would have bought into gold from early on in the week, like really early, right? And this was a setup that was this is my perfect breakup structure setup, right? The market was creating these lower lows, but then it would have pushed up, right? So it pushed up, and it's on a 4 hour. It pushed up, so it broke all of these lows or these highs. Sorry, it's creating these lower highs. It pushed up, so it broke structure by taking out these highs. And then it retraced right back into the 61 fib extension level, 51. And so I bought, this is me buying. This is like the first few hours of the week where the market opened. No, I'm really not supposed to be doing stuff like that, right? That's actually very bad. Liquidity in the market at the start of the week don't make sense. I should be entering trades then. So I got stopped out. I think I got stopped out. Or maybe I didn't get stopped out. But I think I might have extended my stop loss from where it was. So which is also bad. Extended stop loss when you're in drawdown. Drawdown is when pretty much you're losing money, right? And then it started to push up, right? I look at my target. My target was all the way up here. Just to make note of my target. This is where the target was supposed to be at 25.44. I end up scaling to the position where I entered another position after this pullback here. So I now have two sets of positions open, and the market pretty much pushed up halfway. There was absolutely no, and I ended up closing the trade right here. There was absolutely no reason why I need to change to close the trade right there. No reason at all. So I end up having three positions. So these are the two I originally entered. And these are the two I originally entered. And I actually doubled the position on the third entry. Right? There's absolutely no reason why I should have exited that trade. But I did. I'm not sure why, right? But I did. So that's where it was. So back to what happened now on Thursday. So when the market, not Thursday, yeah, it was Thursday. So when the market actually pushed up on gold again on Thursday, I would have re-entered on the pullback dashboard. Sorry, back to Thursday and back to this gold position here. So when the market, so this is a continuation from where the market was actually going, right? So I would have exited, but the market actually ended up pushing back down. So from where I'd entered. All right, so the market actually pulled back. So after I exited, the market actually had done a pullback. Now I re-entered the trade around here. After I see it start creating this like structure here, I re-entered. But then I actually aborted it. Didn't stay in there. Look what happened after I exited the trade. The market ran right up. In fact, and this was my original position, but my original target was 24.54. The market actually ran right up. It actually created an all-time high. So this is the highest gold has ever been. And this is the price of gold investor ask for ounce. I think it's an ounce of gold. That's what this represents. So 2,500 for an ounce of gold in US dollars. And it pushed right up. So that's another thing where, so that's two things now. So not two things, right? It's gonna end up being three things. Three things. I probably should make note of them. But I need to work on for next week. So one, I should not be over leveraging, shouldn't be over risking. So if I agree to 1%, I should stay on 1%. Secondly, I should not be revenge trading, right? Especially reverse trading and going in the opposite direction. Because at that point, I'm just clutching at straws, right? Because I had a bias before, but because I lost, I decided to change the bias. I end up losing again. Third, when I enter the trades, I need to set them and forget them, right? So it's either the market hits a take profit or it hits my stop loss. But I should try my best to avoid manually exiting trade. I probably should make a note of it. So for next week, which I think I should be able to do, I should be able to make notes on the entire. Yeah, there's no trades yet, so I can't actually click on it. Or maybe, I just made note of it afterwards. All right. So no over leveraging, 1% per trade. No change in my bias and revenge trading. And also, I should not be adding to a losing position. I should not be extending my stop loss. Right. And I should, when I put the trades in, I should set them and forget them. Either I get hit by my stop loss or my take profit gets hit. So those are the things I need to work on. And that's what really beat me this week. Because I think I could have made a whole lot more gains if. So you see how the gains, so you see how the behavior and the gains time now? All those trades that I showed you, I could have maximized so much more of them if I actually put the things in practice I just said I need to fix. Right? And there's also the case where I think I'm just trading way too much. Right? There's absolutely no reason I trade three instruments. There's absolutely no reason why I need to be trading entering 8 trades in a day. That is madness. 7. All right, it's absolutely madness. And look at this day. I only took 4 trades on this day, which just ended last week Friday. But yeah, it's ridiculous. So I need to also work on that. I need to be more, and the reason why I'm taking so many trades is because I'm actually flip-flopping and I'm not very efficient. So I need to get more efficient by cutting down number of trades and just put more enter more quality trades. If you look at this has gone down drastically. So like some of the metrics I'm just be getting beaten on some of them. Let me see what it was last week. And it was definitely lower than it was definitely higher than that last week. So it's showing my average win versus my average loss. So yeah, my average win versus my average loss. Is to be honest, this is supposed to be I've been going for a 1 to 3 risk ratio. So ideally I want this to be 3. So my average win should be 3 times as much as my average loss. I'm not at 3%. It got worse this week, which shows that I, which also, but what this pretty much shows is that when I'm winning, I'm winning smaller than when I'm losing. I'm losing bigger than when I'm winning. So, and that happens because I entered there are a lot of trades that I exited, right? As soon as it pushed up, I exited it. There are quite a few of those like small amounts um that I won that is currently beating average, like this one. So I just aborted this trade, $13 a win, but then it's also impacted my average, right? Because that's gonna pull up my average, $34, $51. Like those and then look at these losses. The losses are massive, right? So that's what I need to fix. So essentially what I'm going to actually do is use this as actually a guide. Because how do I know that I'm improving in terms of behavior, right? Because the net P&L alone cannot be used. Because you guys can see I'm actually making money, right? I'm making positive gains, but that cannot be the only metrics that I use, right? I need to, it can't be the only metrics I use. This might be the ideal metric. So this needs to be getting closer and closer to 3. All right, so let's see if we can make some improvement for next week. This just shows you that because it says total profit divided by total losses, right? A profit factor above 1 indicates a profitable trading system. I look at my win rate. My win rate is like 52%, right? I'm winning 52% of trades I enter, right? Which is good. But again, that's not, and that's not very, I just don't like how I executed. Let me see if there are any other trades that, so I would have shown you what happened on Thursday, which is the worst day, because that's the day I was actually up. Was this the day I was up $2,000? Yeah, I was up 2,000 and I completely pulled it down. Now, yeah. So next trade I want to look at is G. So this was not my setup, but then this one was my setup in terms of that's how I was thinking about it, right? But I think there's something I actually missed on this trade. Now, yeah, some of these screenshots come from my phone, so it looks a little weird. It doesn't look it looks very small. So for this trade, I would have committed multiple cardinal sins, right? But what I wasn't actually paying attention to. So the market. So this is how I was looking at this trade. I was looking at this trade in terms of there was even something I missed. See? I didn't even see this. Let me see if I can go in the charts for a better look at it. There's like something I missed. Okay, sometimes my alarms on this thing is really low. Let me take after. Yeah, I have alarms on I have these when I set the price alerts kind of really loud. I don't know how to stop them. I don't want to I don't know how to stop them. It's kind of too loud. Hope it actually stop now. All right. We're just gonna have to use this thing. If you look, it's gonna be a little hard. I might have to zoom it. But if I was actually paying attention, I would have seen that the market. So I could consider this a low, right? This is actually a low. I consider this a low. So the market had the low, this low was actually taken out. I didn't even notice it. So this low was taken out, Right? So essentially, what we're looking for the market to do is to push up for some and then get some rejection to then continue to fall. I wasn't even paying attention to that. I was only looking at what happened here. I was looking at the market went down here, pushed up, technically created a new high, and I was considered a continuation of the trend. So I thought the market was rejecting. In fact, I didn't even wait until the market got to 61. If you look at this, I entered around here above, way above the 61. So there's even I didn't even properly execute it, what I was trying to do, which is a breaker structure. Didn't even properly execute that. And it wouldn't that well, it wouldn't even have been a breaker structure. This would have been a continuation of the trend. This came a breaker structure. This isn't even a breaker structure. I might have to change it. This is not my this. Oh yeah. And then what I did is I continued to add to the losing position. Like just taking some massive entries on there. So I'm gonna show you what I was doing. Some massive entries, and I just kept adding to it. So initially, I think initially entered with 0.65 micro lots, which is not an actual standard lot. All right, so these are so essentially I enter standard lots on the micro account. So it looks like, or when I'm entering it, it looks like it's a standard lot, because again, I tell you how the micro account works, where it's no a multiple of what it's supposed to be. It kind of has the same impact. I'm sure that I'm not sure I explain that properly, but this would have probably been 0.006, which you can type in on the trading platform. A trading platform, I think, takes up to only 2 decimal places. This would have, for it to be a micro position, it would have got to go back to like 3. Or is it 1? 4,000. It's actually 1 decimal. It have actually got to go back to so it's actually 0.06 in actual standard lots, but because the micro lot is 0.6. All right. So I was entering these massive positions. So if you look, one position alone is actually greater than the 1% I should be risking. So I was crazy over risking. And it's kind of sad that I didn't even realize that I wasn't even paying attention. So I gotta show you last year that when you enter the playbook or strategy, you can put in the rules. So this didn't even count because I didn't enter the market. I didn't enter the market at a key level or the fib level. It was more so the start of the session. It was more so, let me see if it was the start of the session. It was more so, it wasn't even the start of the session. It's like well within the session. This is like a couple hours within the session. I didn't follow any of these rules. This is really and truly not my setup. I can change it to not my setup because it's not. This is not my setup. All right. So I didn't even see that. No, I think in both. I didn't even see that I blundered there. Market, I actually took out this low. So it broke structure here. Push back up. It doesn't necessarily, so that's the thing, the breaker structure. It didn't necessarily have to create a lower low. You know, it could have, which is what it did here. And then I was also forgetting that this was a weekly level. Weekly levels are stronger than a daily level. All right. So these are very strong levels. The market initially pretty much rejected this level twice. And I never see that it rejected it twice when I was entering in. I entered during the purple here. No, actually entered the start of the session. I entered here. I remember seeing the structure here. Yeah, so as again, I'm not paying attention. So I need to definitely pay more attention. But yeah, this is where we are end of the week. Crazy thing about it is that I still 50 trades in 1 week is 50 trades in 2 weeks is crazy. So I still in profit, still making gains, still making gains. We show that we shows again. So even in the midst of doing all the craziness, still making gains. Imagine if I clean that up. You know, so that's this where we are. Week 2, small account, big habits. Week 3 is actually the probably the least volatile week in the month. I might have the least number of opportunities. But let's just see. And I've had how many? Not that it matters though, but I have 1, 2, 3, 4, 5 red days. And I have 1, 2, 3, 4, 5, 6 green days. And pretty much a break even day. So yeah, not bad. And Monday was the biggest day in terms of losses. This is pretty much a break even day too. You know. Um and then on today, which is Friday of this recording, I would have had this. No, it was a repeat of the same story, to be honest, of me just doing crazy. Because I think this was around 3 a.m. this morning. Like this trade makes no sense. Like this trade literally makes no sense. So market having so coming from the same setup I was showing just now where I was actually trying to buy and market sold. So the market dropped all the way down here. So the market is in a massive downtrend. Downtrend. Right? So that now that adds one more rule. Actually, I can write the rules, I can write the rules. I can make sure that I'm actually abiding to them. I can write them out and put them somewhere where I look at them before I enter the trade. So that probably can be part of my trading plan. I was trying to counter trend trade. Like easy. The market is pushing down. So the market is selling and I'm trying to buy. And then I did it in a very inelegant way because I was risking way too much on it. So if you look, I end up losing like then I should be risking $3 per trade. Right now I was risking like double the risk. All right. So I think I should make a note of this somewhere. I probably should put it here. Like just create a folder and just call it trading plan or trading rules. The green for profits. I'm just gonna add notes in there. All right, I'm going to call it trading rules. What was the first rule? Only risk 1% of trading capital on each trade. Two, rule is do not counter trend trade. Do not extend stop loss initially. Spell initially entered. Trade exit should either be stop TP or stop loss. So we're not messing with trades. We're setting it and forgetting. Setting and forgetting. Setting and forgetting. What's the other one? So only 1% do not counter trend trade. What was the other set of stuff that I said? Do not add to a losing position. So already in drawdown, don't add to a losing position. All right, so this is minus. All right, I think that's looking like us. So only risk 1% of trading capital on each trade. Do not counter trend trade. do not extend stop loss initially entered when in drawdown. So in drawdown, don't extend that. Setting and forgetting trades exit should either be a stop loss or a tail. So either hit your stop loss or hit your tail. Sorry, hit your TP. And do not add to losing positions. Yeah, I think this might be enough. So let's see how well I can adhere to these and see how, so the measurement, well, I guess, yeah, let's just see how well I can measure these. And so how again track to the KPI is average win divided by my average loss. So essentially, my expectation is that once I follow these rules, then the KPI is supposed to improve. So let's write what it is. So let's say at the end of, let's so we can track it at the end of week 2. So week 2 value, all right, let me put it. Week 1 was 1.77. Week 2, it was 1.23. Week 3, let's see where we can get into. Let me put the month. So this is September. So let's see how well we can. Let's see if we can improve our KPI. Again, I'm not looking at absolute PI, we're not looking at absolute P&L because, as you can see, I can do foolishness and still end up with a positive P&L. So what I want to improve is this. And the target, I'm put the target. Target is at least 3. That's a target. It's at least 3. In fact, I actually need to look at how we're doing it. I can probably have an accumulative. I can have an accumulative. Let me put the value for each week. So let me put the accumulative value and the value for each week. Month to date. So this was it should have been because this is just the first week, so it would have been the same thing for the month to date. So month to date would have been 1.77. Let me duplicate this so I can pick up the value on a week to date basis. So I'm just select this week to see what the value is. This week. Oh, this week is actually less than 1. It's crazy. So it was actually less than 1 this week. Just absolutely unacceptable. And the month to date was 1.23. This is absolutely unacceptable. So let's see if I can get this week. Let's see if I can get this week, week 3, to at least 1 to 3, which should improve my month to date. All right, so guys, so this is what it is. This is where we are. Let's see if we can make this happen. Until next time. Like I have so many. I don't even use this as much. I probably should use this more because there's a daily journal there. It shows like a trade. The trade notes that you would have made for all the trades. I do try to do all of them, but I don't end up, doing all of them. Such a powerful tool. But let us see. Until next time. So I'm not going to do a midweek check-in. I think doing everything at the end of the week makes more sense. So until next time, SJ Fibonacci out.